Overwhelmed by money transfer rules? You're not alone. But what if you could easily send funds abroad for education, travel, investment, or other purposes without reading lengthy circulars? Meet RBI's liberalized remittance scheme, commonly known as LRS. This scheme allows you to transfer money overseas without any special permission from the RBI. In this video, we'll discuss what is LRS and who is eligible, the types of transactions allowed and prohibited under LRS, a step-by-step process for transferring funds, tax implications of LRS, why you should and shouldn't go for LRS. I'm Karunya, and today we will simplify every LRS related rule, step and document checklist so you can send money abroad seamlessly without getting lost in the dizzy policy language. Sounds useful? Then what are we waiting for? Let's get started. Introduced in 2004, the Liberalized Remittance Scheme, or LRS, is a Reserve Bank of India scheme that facilitates overseas money transfers for resident Indians and NRIs. LRS applies to your current account, capital account, and other permissible transactions up to a yearly limit of 250k USD. However, if you want to send more than this limit, you will require RBI's permission. But what are these current accounts, capital accounts, and other permissible transactions that I'm talking about? Let me explain. Current account transactions are those that do not affect your assets or liabilities abroad, such as travel, education, medical treatment, etc. Capital account activities include investing, buying property, and more such things that affect your assets or debt in another country. Additionally, there are other legal transactions that the Foreign Exchange Management Act, or FEMA, of 1999 does not cover, such as giving gifts or money to family members who are in need. LRS helps you get around the limitations of the Foreign Exchange Management Act of 1999 on sending money between countries. LRS eligibility extends to almost all resident Indian citizens, including minors. While LRS is primarily designed for resident Indians, what about NRIs who want to move money across borders? Well, NRIs can also use LRS to transfer money. With LRS, you can use your NRO or NRE accounts to transfer funds from India to abroad. Let's understand this with an example. Meet Deepa, an NRI who wants to fund higher education for her niece Riya, who's studying in the UK. Thanks to LRS, Deepa can remit up to $250,000 a year for this goal from her NRE or NRO account. That said, let's take a look at who can and cannot use LRS before moving on to the next section. Let's quickly summarize it with a table. In short, LRS allows Indian residents and NRIs to open the gateway for seamless money transfers overseas. Well, a seamless money transfer gateway doesn't mean you can send money from illegal or prohibited activities. Now let's discuss the permissible and prohibited transactions under LRS. Starting with permissible transactions, you can send your children's overseas tuition fees using LRS. Next, LRS grants medical treatment to families abroad. This means you can easily pay hospital bills, medicines, insurance, etc. for your loved ones living abroad. With LRS, you can also pay for travel expenses abroad, such as air tickets, hotel bookings, and tours. However, this excludes Nepal and Bhutan. Fourth, you may send money to invest in foreign assets or securities abroad, including stocks, bonds, mutual funds, etc. using LRS. This way, you can diversify your investments internationally across various asset classes, countries, currencies, and economic cycles. And the cherry on top is that you can also remit money to buy immovable property abroad with the help of LRS. Gift or donation, property purchase, emigration. Besides these, LRS can be useful for any gift or donation you can send to any person or organization abroad, such as for charity, social causes, etc. Lastly, you can use LRS for your and your relatives' emigration expenses abroad, including visa or legal fees. As I said, not all transactions are allowed under the LRS umbrella. There are some prohibited areas you need to steer clear of. To begin with, any remittance for lottery winnings, gambling, or betting is not permitted. Second, LRS prohibits the purchase of banned magazines and books containing objectionable or illegal content. Third, you cannot send money abroad for transactions related to your Indian investments or business, such as dividend balancing or export commissions. These require prior RBI approval under FEMA guidelines. Here's a list of what else is not permissible under LRS. Now that we've seen what's permitted and not under LRS, let's get into the details. Let's tackle the number one question. How do you actually send money abroad under LRS? Step 1, pick an RBI authorized dealer bank branch for routing your remittances. Step 2, fill out Form A2 to purchase foreign currency. Step 3, provide your PAN details. Step 4, complete the prescribed KYC and AML, which is anti-money laundering guidelines. We've covered the steps of sending money abroad, but how many ways can you do that? Well, you have several options. Let's explore them one by one. First is the online money transfer service. Simply log in, upload documents, add beneficiary details and SWIFT code, and funds can arrive in just one day. Different online money transfer services have different exchange rates, so do your research before you choose an online service provider. Next up is the demand draft. Banks issue demand drafts in foreign currency for predetermined amounts. While secure, this process is lengthy as draft cancellations require bank visits, making U-turns tougher. If you wish to cancel the transaction, you must visit your bank's outlet, and the currency demand draft can be encashed without your signature. If you're confused about how to select the best money transfer service, watch our detailed video on this topic. On number 3, we also have the good old money order method, a legacy method but still relied on by the tech wary. With money orders, first the remittance orders are issued by banks or post offices and then encashed abroad. Old-fashioned but reliable. Finally, the wire transfers. Wire transfers send messages over SWIFT networks to enable interbank settlements. This approach is affordable and has wider coverage. However, exchange rates may vary, so keep that in mind. In a nutshell, if you want speed, take the online money transfer express. Doubting tech, money order is there, and wire transfers balance cost, comfort, and connectivity. Now, once funds reach overseas, tax implications arise. What are the LRS remittance tax rules? Let's find out. It's time to address the elephant in the room. Taxes. When sending money overseas, you essentially cross between two tax realms, India and the destination country. In this case, TCS or tax collection at source is like an exit fee to leave India. When exceeding 7 lakh rupees, it's as if the Indian taxman is saying, pay me 5% before you leave. But you can get a refund for this exit fee when you file returns under Form 26AS. On the other hand, returns from investments abroad are taxable in India. If you hold the investment for 2+ years, you must pay long-term capital gains tax at 20%. Otherwise, gains are taxed as regular income as per applicable tax slabs. With taxes sorted, let's look at why you should and shouldn't go for LRS before we wrap up with the key takeaways. To help you decide whether or not you should use LRS, I've made a list of its benefits and challenges. Let's start with the benefits first. The liberalized remittance scheme serves opportunities overseas on a platter. With LRS, you can conveniently diversify your funds into booming overseas markets. It's like the RBI granting every resident their Invest Overseas Privilege card. The second benefit of LRS is hassle-free payments. You no longer need to stop dreaming of your international campus life or overseas job. LRS lets you pay tuition fees, buy study material, and cover living expenses in foreign countries without a lot of paperwork. Third, LRS helps you enjoy your vacation without worrying about the hassles of money transfers. LRS makes your dreams of overseas vacations seem more reachable, irrespective of the country. Splurging on a Euro trip or visiting family abroad is now possible for you. Lastly, LRS is a game changer for NRIs. NRIs can use LRS to support families, loan EMIs, medical expenses back home, just like an additional bank account in India, minus the paperwork. However, LRS does come with speed breakers, as crossing tax jurisdictions can get a bit bumpy. The first challenge of LRS is currency fluctuations. Currency fluctuations mean your overseas payments may face volatility risks, eroding the original value you sent. As a rule, always check the forex rates before sending money. Secondly, if you will skip compliance, you will have to pay fines. Always follow all the rules for smooth cross-border money movement. Third, you should assess multi-country taxation very carefully given the complexity of rules. Seeking expert advice can help you with prudent LRS usage. I hope this LRS fun ride gives you the best of overseas worlds, all rewards and no headaches. In short, LRS is your passport to send money globally. We covered who's eligible, the documents required, permitted uses, spanning investments to education, steps to send money abroad plus taxation. But remember, with great currency power comes great responsibility. So don't forget to stick to the regulations. Before you go, please note that this video is only for educational purposes. Any information in this video is not an endorsement or investment advice. That's it for today. Have questions about overseas transfer? Do drop them in the comment section. And as always, like the video if it helps simplify LRS for you, and subscribe for more useful NRI content. Until next time.